Hello, my name is Randy Williams, proud member of Keiretsu Forum, also the founder. This is our 16th year of Keiretsu Forum. We've grown to 42 locations globally, and this is being taped out of Silicon Valley. We have great guests every month, and this is our segment 2 with a wonderful guest, Matthew Le Merle, dear friend, also a member of the last 10 years, also a general partner in our fund. And we're going to be talking about, what we talked about first was capturing the expected returns of angel investors in groups. It's a white paper published by his son, who's at UC Berkeley, and himself, and it just came out. And so the first segment, why don't you summarize what we talked about, Matthew, and then we're going to drill down how to actually get those returns.
Great. Thanks, Randy. So in the first segment, we described how we had looked at all of the academic research, looking at angel investing as a category. We'd synthesized it into this white paper, which is available for download for anyone who wants to read it. And basically, what consistently is found is that angels get a very high return when they invest in groups in the mid-20% IRRs. They have a lower failure rate than venture capitalists. They do, however, rely upon a small number of very successful exits to deliver their return. Because they are relying upon a small number of companies to deliver the return, there is a risk that if they're not highly diversified, they may miss out on the good deals. And so as a result, most angels find they get the highest probability of a very good return by investing in a large number of early stage companies.
Now, just so there's clarity, when you're part of a group or an angel organization, you are investing primarily directly with the entrepreneur. It's not flowing back to the organization. It's not an LLC format. I guess some angel groups have LLC formats, but you're suggesting enjoying the mind share of a community, swarm intelligence, I call it, and then being careful how you invest. So tell us how you actually join a group.
Well, so just before the joining question, angel groups in America, of which there are several hundred, do operate in different ways. Professor Wiltbank, who most recently did this research on the angel return, highlights 3 things that are particularly important. If you are investing in an angel group, and you as a part of that group do deep due diligence into the companies, more than 40 hours into making a specific investment, you get about 7 times the return of if you just do no due diligence or very light touch. The second is when the angels bring their own direct industry expertise to bear, they typically double the return than if they don't have any expertise in the company in question. So when you're part of a due diligence team, you want to make sure that there's a number of people on that team who really understand the industry, the sector, and the focus of the company. And then the last is that where the angels interact very substantially with the company after the investment, and they work really, really hard to help the company succeed, bringing their relationships, their knowledge, their expertise to bear, they actually get a 3.7 multiple on their money. Whereas when they don't interact with the company and they don't help the company after, when they're passive investors, they only get just slightly better than a return of capital. So those are the 3 big call-outs, and angel groups who operate in those ways tend to get the best returns.
So a couple classes of obviously a member and or an angel investor. Let's talk about the person that has time to devote 40 hours to a particular investment. Right. What does he or she look like? Are they amortizing their great knowledge and then possibly investing and then giving a little adult supervision to these companies? What does that person look like? And what is a person that wants to get involved that needs to be passive because they are also working at another job or possibly don't have the domain expertise to invest in this particular asset class?
Right, so that's a very good question. You know, in my experience, angels come in a variety of different flavors, if you will. Clearly, a large portion of angel investors are themselves very successful entrepreneurs, CEOs. They've created companies potentially more than once. They've had successful exits, so they're now wealthy individuals. But this is what they do, and they want to continue doing it by backing other entrepreneurs. The second category are typically corporate and professional wealth. CEOs of companies, senior executives, potentially lawyers, accountants, management consultants, investment bankers. They again are wealthy people. They have other types of expertise that is very relevant, as well as relationships, and they've decided that they want to back early stage technology companies. The third category are people who've made their money in very different areas. For example, real estate executives, people such as yourself who had a great career as a real estate principal or investor, and now they want to diversify into technology. At least in the angel groups that I'm a part of, there's very few inherited wealth members. Family offices do get involved in early stage tech investing, but they're a minority of the angel environments that I'm a part of.
We haven't brought the one word into the equation, which is fun. Yes, we want to make a return, but are we having fun? Are we having fun providing, hopefully, expertise to these companies? And also, tell us what the best profile, as you would see, people listening to this watching this program, if you're going to get involved with a group or a network and or angel group, how do you truly create the path for a probability of success to get your over 20% return, which you talk about in your white paper?
Yes. So I think the first thing is you've got to believe that technology is important in the future of many of the industries that we've relied upon in the past. And so emerging, innovative technology companies are going to have an important role, and you want to help those companies succeed. Whether it's because you believe passionately about a specific area that you'd like to see progress against in life sciences and clean technology. Many of the investors have a mission to why they're investing. But you have to begin with that thought. I believe in technology, I believe in innovation, and I want to back startups. Obviously, it helps if you have relevant expertise to bring to the table. You don't have to. There are a lot of high net worth people who choose to be angel investors, and maybe they bring other assets, other capabilities to the table. They've not been a tech entrepreneur, for example. And then the third is you've got to want the return. And the good news of all of the academic research is the return is very attractive. But it comes at a cost. And that cost is, as you say, a certain amount of work. Work finding companies, participating in an angel group, helping with due diligence. And that is sort of the cost of being an active angel in an angel group. Now, diversification is the challenge. You only have so many cycles, so many hours in the day. And to have a portfolio of 40 or 50 companies that you're actively helping is a significant challenge. And that's why we've created the funds that we have at Keiretsu Forum to help people with that diversification challenge.
So, I have now invested, as of driving down here to Silicon Valley today, this is my 54th investment in Keiretsu. And of course, I've been around for 16 years, and that's how old Keiretsu is. And I truly don't think I'm diversified because I'm still pulling the trigger in things I'm really comfortable. I'm drafting off great mind share intelligence of our community to help me be a better investor, but I'm always swayed by something I truly understand. Now, with a fund, which I'm very proud of, I'm also an LP and a general partner in the fund with you. Now, I think I am more diversified because I am in now companies, because I'm not a really life science investor, but now I am through the fund. We have a myriad of opportunities, and Fund 1 has been closed for a while, and we have 28 investments to date. We'll probably finish off with 40, and Fund 2 is being launched right now, and Fund 3 is going to be actually on real estate. But let's talk about diversification in a fund. So if a member joins an organization and they have the component or maybe a sidecar fund like some of the angel groups do, then focus on things you have domain expertise or you're comfortable with, or possibly you want to amortize your investment by being on the board and also invest in the company. But the fund can truly have you diversified. Tell us how that works.
Yes, well, I think there's two themes that we're hearing more and more about within the world of angel investing. The first is trying to accomplish the diversification, and the second is the notion of syndication. I'll talk about the first, diversification. As we've mentioned, it's critical to having a high probability of getting the attractive return, but in practice it's very difficult for individuals to accomplish if they're doing all the work themselves. So in order to be diversified, you have to have a degree of trust in others. So just as you as an expert are bringing your expert to bear as you make decisions in the companies and the investments that you understand, so if you have a level of trust that other people that you know well, that are part of your group and you have relationships with, will apply the same discipline in other areas that you're not familiar with, then it raises the opportunity of you being passive in backing, in putting some of your money into the investments that these other angels within your group are going forward and making. And that's a way then to get even greater diversification. You're not making the personal due diligence investment decision every time.
I think it's kind of clever, though, the way the fund was created, because I wanted to create a fund with you and also my other partner, who is CEO of the fund, Nathan McDonald, who's chairman of our Northwest chapters in Seattle. I wanted to have a fund that everybody participated. They're still passive, but they're also voting their shares. So let's talk about that. How's that structure work?
Yes. So we spent a lot of time getting a lot of counsel from other angel groups that had co-investment funds, sidecar funds, and so on. Tech Coast Angels, Band of Angels, and others gave us their wisdom. And what we ended up structuring, as you know, is a mechanism in which we don't invest anything until the angels have finished their work. So the angels find the deal, the angels do the due diligence, the angels make their own investment decision, and then if there's capacity left, if there's room in the round, then we have the opportunity to complete or top off the round pari passu, which means on the same terms and conditions as the angels. And so that's our fund concept.
But also, Matthew, even greater than that, then it goes to the executive committee of the fund, and the executive committee then votes yes or no after it's get funded from great angel groups, including Keiretsu Forum, because most of the 90% of deal flow is coming from. But do a shout out, Tech Coast. We've done Tech Coast. We've done Band of Angels. We've done Sandhill.
Angels Forum. Yes.
Angel Forum. So we want to have a collaborative heart and see great deal flow everywhere. Right. But most of the deal flow right now is M&A from Keiretsu. But the voting structure is very interesting. So if you're an LP of the fund, you participate. How does that work?
Right. So and you are absolutely right that other angel groups want to syndicate their deals more and more frequently. But in terms of the governance structure, we've set it up so that we have general partnership who have a fiscal responsibility for managing the fund. We have an investment committee made up of limited partners in the fund. And then once the investment committee, which does not include yourself, myself, and Nathan, the general partners, once the investment committee decides that a deal meets all of the criteria of the fund, they open it up for a vote electronically through Procedure, who's our partner in this, such that all of the investors who are angels in the fund can vote yes or no. Our goal is not to outperform the angels, it's not to cherry pick the angels, it's to make sure that this fund can accomplish the angel return and deliver a lot of diversification for the investors. So
getting back to your report, the white paper, which is available, anybody that asks, please reach out to us and we'll get that to you, or Matthew will get that to you, is the only way you will get those projected returns over 20% is be diversified. Go ahead and invest directly, which we encourage our members to be careful. A lot of risk, a lot of opportunity in anything in investing, including angel investing. But this is an asset, a fund you can get into to truly diversify, but keep investing in things that intrigue you. So in summary, if you were a new angel investor and you had just retired, or whatever that word is, that retirement word, let's change it to transition, transitioning your life. I call it brain food. I think coming to Keiretsu Forum or other angel groups, brain food. You truly are engaged now. So how will you get those returns? You have 30 seconds to tell us how you're going to get those returns.
So the first thing is join a great angel group. Make sure that they believe in collaborative due diligence, expert-based investing, and helping the companies later. Make a lot of small investments, a lot of small bets. Don't put all of your money into 2 or 3 companies. Spread it broadly. And then if the fund can be helpful to you in accomplishing your goals, fine. If not, that's fine too. There's many different ways to be a successful angel, but the returns are great, and it's the reason why many of us do this as a full-time experience.
Wonderful. Well, Keiretsu Forum Presents is going to be broadcasting all year, every month, and we're going to have great content in for our members and our constituents globally. Let us know if you've enjoyed this program. Matthew, thank you so much to see you here and the commitment for you coming down.
Yeah, thank you very much, Randy.
Thank you.